Okay, next week, and I don't have much information about next week, but it's going to be great. It's Patrick O'Heffernan and Domingo Flores will be talking about journalism and democracy. Now, and the only information I have is why a free, independent, bilingual press is critical for Lakeside. That sounds interesting, so come along next week.
So, first I would like to thank Open Circle for having me today, and thank you for the audience for coming and waking up early on a Sunday morning and being here. We have a lot to cover this morning, so let's get right to it. I think there's a difference in the topic here is like I do every year for the past 6 years. I'm talking about the financial markets, what is happening, what's happened, what's going to happen in 2023 in the world, and how it can affect you here in Mexico. So, 2022 has been a horrible year for Wall Street. It's been the worst in well over a decade. If you followed what we presented here last year and the year before that, it should come as no surprise to you that the Dow was down 6%, the S&P corrected 20%, NAS lost about a third of its value, and Bitcoin, we were talking a lot about Bitcoin last year, lost 2/3 of its value. Also important to mention that the Mexican pesos gained 5% against the US dollar. That's very important, and we'll talk about it a bit later. So what's in store for 2023? The global economy of 2023 is going to be a wild ride. The pillars of prosperity that supported 30 years of growth have crumbled. Now the entire world has to cope with rising inflation and rising interest rates, a likely recession with labor shortages, the three effect, that we'll talk about later, the wealth effect, the lipstick effect, and the vice effect, and of course, major geopolitical upheavals. So, well. Yann, not so fast. Last year, you were you were about to tell us that everything is bad, and you're going to talk about more effects. But last year, you talked about the January effect. And so far, since the beginning of the year, everything is up, and up. Well, that's as if somebody was asking me a question, of course. I would say, yes, it's absolutely true. The Dow is up 1%, the S&P is up 3.5%, and the Nasdaq is up 6.5%. Bitcoin, an incredible 40%, 10% yesterday. So what just happened? The January effect. So goes the first week of January, goes the month, goes the year. So, two things happened actually. A little bank called JP Morgan, if you heard of them, has a model showing that recession odds fell sharply across markets, with the S&P 500 now assigning a 73% recession bet, down from 98% in October. Then the EU, while on the brink of recession, just declared that they may be able to avoid it. However, whatever comes from the EU politicians, actually from many politicians, as far as I'm concerned, must be taken with a big grain of salt. Anyway, investors and computers, which now make over 75% of all market trades, return to riskier assets as soft landing hopes are growing. Anyway, that is short term and is still a 73% chances of a recession in the United States. And I'm of course talking about the United States, and no offense to any Canadian being here, because the stock market in the United States represents 60% of all stock markets in the world. So whatever happens in the States will have repercussions worldwide for your portfolio. In the meantime, what should you do? Well, apples and oranges. If you bread that jump, no, I'm kidding. January can be very, very difficult. We'll talk about apples and oranges. As you have come face to face with your portfolio performance for the previous year, you have to compare it with what the market did, and have to compare apples to apples and orange to oranges. If you have a conservative portfolio, you cannot compare it with the Nasdaq. If you have an aggressive portfolio, you cannot compare it with the Dow. It's impossible. You have to compare what works. So if you're aggressive, you have to go with Nasdaq to see what happened, and we'll explain to that in a minute. You have to ask yourself some question. How does your allocation look? Are you comfortable with it? Should you change your sector's exposure? How have your goals changed? Have your situation changed? Get a second opinion. You always have to get a second opinion. It doesn't matter who's in charge, whether you have it done alone, whether your spouse has done it, whether you have a SIM advisor for 25 years. Ask a second opinion. Of course, it would help if you had an idea as to what will happen in the next 12 months, and it's exactly why you've been waiting for me here for the past 15 minutes. So let's see what we have to pay attention to this year. The most important is the Fed. never fight the Fed, we saw on Wall Street. Last year, interest rates, when we talked in January, were around 0 to a quarter. They are now 4.25 to 4.5, which is historically what it should be. However, the Fed will most likely go into 5% in February. And after that, the Fed will decide, has it done enough to tighten, and is inflation under control? Second, politics. The Republican majority in Congress with the Democrat president, well, nothing is going to get done, is what Wall Street likes. No major regulation is going to pass. So for one thing, and that's a big, except for one thing, and that's a big, that's the debt ceiling. The US is standing at 31.5 trillion in debt, and there is always a lot of talk about this. However, the ceiling was raised 26 times since 1996, and they got another 4 months. There is a risk of a standoff, like in 2011, and that led to a government shutdown, which led to the first time ever downgrade in the US debt rating, which will make more difficult for the US government to borrow money. COVID-19 should be less of a problem this year, but we're not immune to another wave, 5.0, version 5.0 of the COVID this winter, and possibly mandatory booster shots that are now priced at $140 a piece. The economy, inflation, the most important. Last couple of reports, inflation was getting lower, about 6.5% adjusted. But the adjustment is the government removing food and energy, basically what affects everyone the most. Well, for Ukraine, and at this point, peace is, it should be the priority, not rearming and not letting these people die, at least in my opinion.
Another question here?
For someone in their mid-80s who is debt-free and living here prosperously, how would you structure your portfolio as far as stocks, bonds, and other investments?
You're breaking up. As far as
Stocks, bonds, and further investments.
Always, to me, I'm a financial advisor, I'm independent, so it's a good idea to always, when the stock goes up, the real estate market doesn't go up as fast, and kind of vice versa. Right now, because interest rates are at 0, everything is moving in tandem. So the prices in the US are being very hurt for real estate. The last time to sell real estate in the US was last summer. And now, of course, from 0% to 5% costs much more to buy a house. That's so much more to the mortgage. So if you're here and you're debt-free and you're well invested, what you want to do is invest all over the world. Don't be US focused. Work with somebody that knows what's happening. Invest in Mexico, in Brazil, in other countries, in Europe, maybe not so much. But I see this year being very difficult. And if you don't have a problem with it, everybody does whatever they want. The defense industry looks pretty good to me.
But percentage-wise, how would you do it percentage-wise as far as fixed income, stocks? And
That's the kind of question that is too personal. It depends for everybody. It depends on many more factors than just your financial situation. Depends if you have 100,000, if you have $1 million, if you have 10 million. Depends how healthy you are. The history of cancer in your family, how many years you expect to live, 5 years, 10 years, do you have kids, do you have grandkids? I mean, there's so many questions. It's very difficult for me, actually. It is not right for me to give you an answer, because it would be a misleading answer. I don't know you personally, and I don't know what your situation is. So it's too general of a question. Ask with your advisor, or educate yourself about it, or ask a second opinion. If you don't want to spend 1% with somebody doing the work for you, which I think is crazy, the fee is, well, if the advisor that you had, you only lost 10% last year, he earned his money or she earned her money very well. If you think you want to do it yourself, well, you have to devote 2 to 4 hours a day to know what all the moving parts. And you have to know, like again, best advice, don't buy stocks. Buy a company that you know. Buy something that you know, maybe something you worked at. And then you have to diversify in different countries, in different currencies, in different sectors. Everybody's talking about gold right now, but everybody's talking about gold. Don't put 80% of your money in gold. That's crazy. Last year I was talking a lot about Bitcoin. Bitcoin was at the time, I'd lost 30%. I think it went from 65 to high 40s. Beginning of the year was at 16. if you listen carefully to what I said, don't put all your money there. Put your gambling money. Don't go to Vegas. Put $100 a month, $100 a week. But I don't know. Are you a millionaire? Do you live on fixed income? You cannot buy Bitcoin, or I don't say Bitcoin. You don't. Again, I'm not recommending Bitcoin. Any of these stocks you can buy. 50. Don't buy that expensive bottle of wine and buy once a week, or don't go to that. Buy your Bitcoin once a week or once a month. And at the end of the year, you'll see if you do it well, but be ready to lose that money if it could be. Or it could be your best performing investment. Again, if you started this at the beginning of the year, you're up 40%.
Why is the peso so strong against the dollar, and what do you think the future trend is?
I didn't read, but in my notes, that who would have predicted last year? 2 years ago, it went up to 25, and everybody says, the peso is just dead in the water. And in light of the fact that interest rates are up, and that the US dollar at the best rally in 20 years, as any Canadian will tell you, or as Europeans, in which now it's very expensive to go to the US, I think that the federal bank, the Bank of Mexico, raised interest rates early because they know they have an inflation problem, but they always had this problem. I think right now on the test you get 10% or 11%, so it's very attractive to some people. Now, again, I'm not recommending these investments because it's very hard to tell. I can tell you every 10 years or every 20 years, I have a charge going back 80 years. That every time you kept your money in pesos, you lost. I've got the proof, but every time you kept your money in for more than 10 years, there was always a major devaluation, there was always something major that didn't make sense. So when you invest in Mexico, invest in companies that you understand, what they do and why. You have to do your homework, or somebody has to do it for you, but they have to understand your risk tolerance. Again, past 5 years or 6 years, every year we talked about something different. Your profile. What's women live 10 years longer than men? How are you going to be protecting them? Get that right information. So everybody wants to know what's the holy grail. Okay, you have to spend the time, or you have somebody doing it for you, and spend the time. You should do it every day, at least for an hour or two. Know exactly what's taking place in the world. And geopolitics is now very, very important. So that's why I mentioned BRICS. It's not only what you hear in the US. It's not CNN should not be the only form, or CNBC for that matter. Bloomberg is much more interesting, but Bloomberg is very expensive if you want to have the professional information. Next.
I have a question. I was reading on the stock market page in the paper, there's a 28-day, I guess, a CD that pays over 6% net. Can you explain that, what it is?
What's the duration of the CD?
I didn't understand what it was. It says 28, it's a 28-day product. So
Mexican? Yeah, they can see that in the States. 6% is wrong. Yeah, the bank, the interest rate is already at 10% here in Mexico, so 6%. And I know there's a lot of you out there saying, hey, look, I've got this, I'm making, there's a bank, I'm not going to mention many names, I'm making a killing. Know that it's not from the bank, it's from the government. It's something that is kind of complicated. I had a Mexican financial advisor explain it to me, and I had a hard time understanding it. So when you go to the bank and that little girl may be very nice and speaks English and tells you, how are you going to make a lot of money? Be very careful. And the fine print is in Spanish. Good luck. So they don't. In the States, you have certain laws that have been passed laws that have been passed for the past 100 years to protect investors. Here, no, not so much. They don't have to disclose you all the fees that are involved. They don't have to. So at the end, you have to make the calculation. But any CD, or they don't even call it CDs here, but e-tests, whatever is for a long period of time. Yeah, it's basically designed to beat inflation. But look at, again, what I was saying earlier, what the government does is they remove food and energy. are you paying the same amount of energy cost than last year? Are you paying the same amount for eggs, just to say eggs and milk, flour? Those costs, in some cases, are up 50%. I'm not even talking about imported product. Somebody was telling me, oh, you know what, it's very expensive, the glass of wine here is very expensive. I said, well, you're drinking a French wine, French wine got up, on average, 50%. French cheeses, or German product for that, or German beer, the good German beer. It's up 50%. If you can get it, because a lot of products you can't. I guess one more question, we're getting close to the end.
Yeah, time for one more if anyone has any going once, going... Oh, who do you want to take that?
Personal as well. I'm a Brit, so I'm interested in where you see sterling against the US dollar, or the dollar against sterling, where you see that going over this year. Thank you.
That's a good question. And I'm saying this just to think about it, not to give you a kind of an intelligent answer. Everybody predicted after Brexit that it would be a disaster for the UK. It was not. They did okay. Why they're doing so badly this time is because the UK replaced whatever trading they had with Europe, with the United States, with Canada, and with Australia. So I don't think the UK was doing badly. What they're doing badly today is because of the cost of energy, and that's what is hurting them. Traditionally, the UK has always had a strong monetary policy to make sure that the pound sterling was always at the highest it could possibly be. It worked some of the time, not all the time. The Germans were much better at it than the Brits. It really depends who heads the Bank of London, and at this time, I'll be honest with you, I do not know who's in charge. I know that they're changing Prime Minister if you change underwear these days. So who's in charge? What is the policy? They're, again, wasting too much time talking about, just like in the States, oh, it's Putin's fault, it's Putin's fault. Wait a minute. The sanctions, you decide to put the sanctions, do they make sense? The Irish are saying, no, the Scots, especially the independent parties, no, it doesn't make any sense. Stop doing this. Find a peaceful way, because the Europeans are paying through their nose. I mean, if you think things are expensive in the US, some people cannot heat their homes. In Germany, they're cutting trees. All the Germans are all green, the green movement. They're all cutting trees. Why? They cannot heat their homes. Because the prices in France, it's, I think, 75% higher, the electric bills. And if you don't pay the bill, they just take the thing, but it's not a month or whatever. If you don't pay it within a week. And it was liberated, the market was liberated. So now there's a floating market. And the spot price goes up, can go up 50% in a week. So it's really crazy. The major utilities are losing a fortune, and they're mostly government owned, so the government is paying, of course, all this. They're going to tax the people. So how England is going to do, I think the economy is going to do well. It looks like a lot of Russians have decided, and Ukraine decided it's no longer a good place to be, because now they've seized a lot of their assets. So when you have that big money leaving, it's never good. Monte Carlo is a good place, apparently, to be for both of them. So they're fighting on the side, but they're getting drunk together in the best places in Monte Carlo. That's kind of crazy. I think UK will be doing okay. They will have a very tough year. I think they will go through a recession. As far as the currency, I think they will have to keep interest rates high. So as long as there's an interest in the currency because of the high interest rate, it will keep the currency stronger. As long as there's demand for a currency, and that's why I was telling you, and I'll finish with this, that's why I was telling you the BRIC is very important, because of all that trade, especially oil, natural gas, and all the major commodities is no longer done in US dollars. And the euros, they've tried, it didn't work. It's all done in US dollars. If it's not done in the Indian rupee, in the ruble, the Russian ruble, and the Chinese currency, the yuan, and all the basket of currencies is backed by commodities. In the US, the US dollar is backed by 31 trillion of debts, and a very strong military. So that's why you got to put your hands in all those baskets and really understand what is taking place. I would not keep all my money in pound sterling, nor would I keep it in dollars, nor would I keep it in pesos. You have to diversify again, by country, geographically, by currency, by sectors, and hopefully, you'll be steady. Thank you very much again for being here this morning. I like one more note. Things have changed, you can tell, because pre-COVID, this place was full and there was about 400 people there to rent chairs, and people were sitting all the way in the back. Last year we had about 55 to 60 people, about this amount, and that I think is a huge indicator to me as to who is here, who has moved here. David Truly, Dr. Truly makes a great presentation once a year as well as to why people are moving and what are the flows of gringos coming down here and leaving. But it seems to me that this has shrunk quite a lot. And from what I'm hearing from retailers, restaurants, and so on and so forth, the trend has really changed drastically, which most likely will affect real estate prices. Think of that.